You know that feeling of déjà vu? That weird sense that you've seen something happen before? Well, in the world of global economics, a lot of people are getting that exact feeling when they look at China today and remember Japan back in the 1990s. So, let's dive into this.
This is the big question we're going to tackle. We're going to look at the numbers, the history, and a really puzzling mystery that has economists scratching their heads. So is China actually walking down a path that Japan already paved decades ago?
At a glance, the comparison is, well, it's startling. Here's a quick side-by-side of Japan at its peak versus China right now. When you look at the key stuff, like corporate debt, public debt, and overproduction, the numbers aren't just similar. In some cases, China's are even more extreme.
And look, this isn't just a surface-level thing. Once you start to dig in, you find that the parallels between these two economic giants, separated by just a few decades, well, they're getting too big to ignore.
Yeah, and this quote from our source material really just hits the nail on the head. It's not about one or two little data points anymore. It's a whole bunch of them that are painting a very, very familiar picture. It's gone way past coincidence and into a really compelling pattern.
All right, so let's get into the hard evidence. We're going to unpack the specific numbers that are driving this whole comparison, and we'll start with one of the biggest red flags out there: debt. Okay, so what's really fascinating is how the data tells the story here. Look at that orange line. That's Japan. You see a huge run-up in corporate debt, it hits a peak, and then this long, slow process of paying it all back begins. Now look at the blue line for China. Whoa, it's just this relentless climb that has already blown past where Japan topped out.
Let's put some hard numbers to that. At its peak, Japan's corporate debt was about 147% of its entire economy. Today, China is sitting at around 165%. That means China's corporate sector is carrying even more debt than Japan's was at the absolute height of its bubble.
And the next piece of evidence just builds on that story. Investment as a slice of the economic pie peaked for Japan at around 32%. China, on the other hand, it's been running above 40% for 2 decades. That's an incredible, historic reliance on just building stuff, factories, roads, and especially apartments to keep the growth engine running.
And all of that building, all that investment, it leads us to our next key concept: excess capacity. This is a really crucial idea. It's basically what happens when you build so much stuff that you just run out of people to buy it or use it. It leads to a ton of waste and inefficiency.
And to make that abstract idea feel incredibly real, just look at this number. This is the estimated number of empty apartments in China: 65 million. Let that sink in. That's not a typo. That is enough to house the entire population of France, and they are just sitting there, empty. That is excess capacity on a scale that is just hard to wrap your head around.
And this problem isn't just in housing. The issue of these sectoral gluts, or basically just making too much stuff, is everywhere. For Japan back in the day, it was things like steel and semiconductors. For China now, it's real estate and steel, sure, but it's also in the hot new tech like solar panels and EV batteries.
So this brings us to a really critical question. I mean, when your economy is just groaning under the weight of all this debt and all these empty buildings and unused factories, what's the logical next step? What's the playbook? This is where the story takes a really fascinating and honestly a kind of puzzling turn.
We've now arrived at the central mystery in this whole thing. We're going to look at China's currency, the yuan, and a super high-stakes policy choice that seems to just fly in the face of the historical playbook.
So, what is China doing? This chart might look a little complex, but it tells a pretty simple story. All those gray bars represent China's central bank jumping into the market. Notice how they've gotten super dense since the middle of 2023? They are spending a lot of money to do one thing: stop their currency, the yuan, from getting any weaker. They are actively propping it up.
And this really gets us to the core puzzle. Normally, you'd think a country in this spot would want a weaker currency, right? It makes your exports cheaper and helps you sell off all that extra stuff you've built. So why is Beijing fighting so hard to keep its currency strong? That's the question that has everybody watching.
To understand just how big the stakes are for China's decision, we have to look back. What exactly happened to Japan after its bubble burst? The fate of its currency gives us a really powerful hint.
The story of the Japanese yen after the 1990s, well, it can pretty much be summed up in these 4 words. It wasn't some sudden, dramatic crash. It was something much, much slower.
And here you can see that slow-motion slide in action. This chart traces the long, grinding depreciation of the yen. After Japan's bubble popped, its currency just entered a decline that has lasted for decades, slowly bleeding value against the rest of the world's currencies.
And what was the final result of that long slide? Over all those decades, the Japanese yen lost about half of its value in real terms, a 50% drop. That was the path that Japan ultimately went down.
So, let's bring it all together. What does Japan's past tell us about China's potential future? It's time to connect the dots and think about the path that might be ahead.
So here's how the two paths compare. Japan's past was defined by decades of companies just paying down their debt, a period we famously call the lost decades. The potential future for China looks hauntingly similar, a huge risk of investment just grinding to a halt, but with the added pressure of the government itself having to take on more and more debt to keep things from falling apart.
And that leaves us with this final thought. The economic rebalancing in Japan was a marathon, not a sprint. It took decades to play out. Looking at all the eerie parallels we've just walked through, you can't help but ask, is China's own long, challenging journey only just getting started?